Hi, I'm John Stevenson, the Guaranteed Retirement Guy, and I want to talk to you about the very best companies to buy an annuity from. So what are the best companies? Who are they? Who should you work with? You might be pitched a certain annuity from a certain advisor, and you look up the company and you read all these bad reviews, and you're like, oh, well, I thought they were a good company, but maybe not so much. Well, keep in mind with these companies, yes, they might be reviewed badly by a lot of people, but keep in mind, a lot of people do not ever write a review unless they're mad. Okay, so that insurance company could be very, very well liked and have most of the customers might have a very, very positive experience with them. But unfortunately, the ones that don't have a positive experience, they will write a review and make that company seem like a terrible company to work with. So keep that in mind. So I'm going to review with you the very top companies that I would recommend working with. If you're looking for a good company to buy an annuity from, I'm going to show them to you. Okay. So I'm sharing my screen and I'm showing you everything right now. Okay. I didn't filter out anything. So I'm showing you all the ratings. Okay, I'm showing you B ratings and I'm showing you some A ratings. There's some A-rated companies that don't have great customer service, but there's also some B-rated companies that have great customer service. Keep in mind that even though it's a B++, doesn't mean it's a bad company. It just means that they are deemed a little bit riskier than an A-rated company. And that could be the difference of $5 or $10 billion in less capital, okay? Or maybe the reserve is not as high. Maybe they only have an 80% reserve versus 100% reserve, which if you compare that to a bank, that's still really good, okay? A bank's reserve requirement, what is that, 10%? Okay, they lend out 90% of your money. Still, if you've got a company that's B++ and they've been around for a while and they've got a good track record, then rest assured, you're probably going to be okay. They're insured by the State Guarantee Association, just like the A-rated companies are. Okay, so keep that in mind. So you'll notice at the top, and I'm just talking about income annuities right now. I can show you the top MIGA annuities later, but if we're looking at just top income, okay, I'm showing someone who's 62 years old, their spouse is 60, and they're looking to put $500,000 in, and they want to take income in 8 years, okay? They're deferring it for 8 years. They want to take it at the beginning of contract year 9, okay? So that's, he's 70, she's 68. So if we look at that, the income is almost $68,000 a year, and that is with EquiTrust. EquiTrust is a good company, and the only reason I can say that is because I have personal experience with them, okay? They are very good to work with, and I've worked with them for a number of different situations with different types of clients, and they're responsive. The paperwork's easy, and they're very, very solvent. Okay, they've got a lot of capital, and so I would recommend them if you are looking for the highest income right now. Yeah, absolutely, I would work with them. Keep in mind, a lot of these B++ companies become A-rated very quickly. So let me give you an example. Sentinel Security Life. Really good company. They're based out of Utah, and they're rated B++. Their income is really high, and they just got an A rating from I can't remember who it was. Was it Fitch or Moody's? It was one of them that just changed their rating to an A. Okay, and that was just a couple weeks ago. So don't let that scare you off. I mean, you've got companies that are B++ that will be A-rated shortly, and you don't want to miss out on some good income because they weren't exactly where you wanted them to be. A- is very, very close to a B++. Okay, so keep that in mind. Okay, another good company is Nassau. Nassau is B++, but guess what? They've been around for a long time, since like the 1800s. That's a pretty good track record. You think, all right, well, they're B++, but wow, they're old, and wow, they got a good track record, and they were fine through the Great Depression, and through the savings and loan crisis, and through all of the world wars. That's a pretty good track record. They're probably safe. And of course, they're state insured. Okay, now we look at Aspida. Aspida, they're fairly new. They're rated an A. Why are they rated an A? Well, it's just because the company who backs them has almost $500 billion. That's why. But they're very, very new to the annuity space. How new? Well, 2021. That's pretty new. Now, it doesn't mean that they're new, to the world. Okay, they've had other other offerings before that. It's just the annuity space that, they just barely started offering annuities. And so, but they're very, very solvent and they're very, very strong. But if you're looking for a company that's a lot older, well, they're not very old compared to Nassau, which is very old. They're very, very old and they're very solvent. They're very strong and they give you a lot of income. But if you're looking for only A-rated and you want as high as a rating as you can possibly get, then I would recommend North American. North American is almost 130 years old, and they're A+ rated, which means they have a very, very high reserve. Okay, and the income's not bad. It's $61,000. Yes, it's not $68,000 that you're getting up here, but it is giving you that A+ rating, and they're very, very old. Okay, they've been great to work with, by the way. I have done a lot of business with them, and they've treated people so well, and the income they paid out is very, very competitive to a lot of other companies that I work with. So I highly recommend working with them. Global Atlantic. I've not worked with them a lot, actually, but they're a good company to work with as well. I just haven't worked with them a lot because they haven't paid out as much income as the rest of these other guys. Doesn't mean we won't be able to, they might surge ahead. A lot of times they will. A lot of times they will bring out offerings that will beat other companies for a while, and it's good to take advantage of those. But they're a good company. They're rated A, and they've been around for a while as well. And it's the same with Emeritus. Emeritus is a good company. The income is usually not as high. Emeritus also will offer different types of annuities where they'll give you higher amounts of income for the first 5 years, and then they'll drop it drastically later on. Most of the time, I don't recommend that, but they are one of the companies that will offer you that. Heritage Income, B++, they're a good company. You've got Corebridge Financial, which was formerly AIG. A lot of people will say, well, AIG, they had that big crisis where they were too big to fail and the government bailed them out. Well, let me just clarify. The government bailed out their parent company. The parent company was trying to borrow money from AIG's annuity, the annuity life insurance. Okay, they were solvent. They were fine. They were extremely solvent. They were very strong. The parent company who did the investing, in things like bad mortgages, right? They were going down. They were going down quickly, and they were trying to get the U.S. government to let them take money from the annuity side. And of course, the government would not let them, and they just bailed them out. So anyways, keep that in mind. They're a very, very strong company. Okay, then you got another one by Nassau and got Midland. Midland's pretty good as well. They're actually a sister company to North American. They're owned by the same Salmon's Financial, which owns both of them. They're A+, and they're like 120 years old, I think. So very, very good company. And they got some options. They were one of the first that I knew of that offered the long-term care doubler if you were to take it in-home. Because most of these will offer you long-term care doubler, but you have to be confined in a nursing home. With Midland National, they allow you to do it at home, which is a big deal because after COVID, everyone realized, hey, I'd like to have in-home care. I don't want to have it in the nursing home. Okay, that's important. All right, some more by AIG, F&G, Fidelity and Guarantee. Fidelity and Guarantee, they're not owned by Fidelity. Okay, they're not. Completely separate company, but they're great to work with. And I've put money into them with clients. We've activated income with them, and they've been fine. They've been around since the 50s. They're a very solid company. Nationwide, A+ rated, definitely a little bit higher rated than F&G, but they haven't been around as long. Okay, they're a newer company. I believe in the 80s is when they began, but they're a solid company to work with. And then you've got American Equity. American Equity, really good. They're A-, but they're one of the best growth annuities for income available. And why do I say that when they're all the way down here as far as income? Well, let me show you. This is showing me deferring the income for only 8 years. Watch when I defer this for 15 years. Look who gets on top. Yeah, it's pretty good, huh? American Equity. They are really good right now because they're offering a 6.5 for 20 years. So that's huge. I can go in here and say, okay, well, if I want as much growth as possible, what would be the best annuity company to go with? Well, that's American Equity. If you're going to take an income for, I would say at least 13, 14 years is really when they start to shine. Because you'll notice that benefit base, it grows slowly, but man, does it grow. Look, by the time year 16 rolls around, it's worth $1.4 million, and the withdrawal rate's 7.28. When multiplied together, that's $102,977. That's really, really good. No other annuity provider is giving you that. And so that's why I recommend them. So, and that's, and we'll just change this up just a little bit. I mean, if I was, let's say I was 50, okay? I was 50 and I've got $250,000 in an old 401k, okay? Or an IRA or whatever. And I want to roll it over. And let's say I want to take income. Let's see here. I want to take it to 65. Okay. I'm going to wait till Medicare. My wife, though, she is 49. So I'm going to let this sit for 15 years. You can see $250,000 is going to give me $41,000. That's joint income. But I also want to have the ability to wait longer. What if I want to wait 20 years? What if I want to wait 20 years because I want the maximum amount of Social Security that I can possibly get? Because if I die, my spouse is going to get the higher of the two benefits. And so knowing that, I might want to wait till 70 to take my Social Security. And if that's the case, maybe I want to work that long too. And so if that's the case, I'm just going to stretch this out a little bit longer. Now keep in mind, you can buy these annuities and you can let them grow as long as you want. You don't have to take income at certain points. A lot of people think that when I play with this software, they think, oh, I have to take income at this time. What if I want to take it earlier or later? You can. Okay, you can. You're never, ever tied to a certain age. They will give you guarantees for every single age. It's just good to remember that certain annuities work better for shorter time periods and certain annuities work much better for longer period. And that's why American Equity is really good for long periods. Because look at that. 20 years of 6.5% grows to a point where, what are we looking at? $250,000 at 70 years old is giving you and your spouse $63,663 guaranteed annually every single year for the rest of your life. That's really, really good. It's awesome. Okay, so if I was to go in here and compare this, check this out. Benefit base in the beginning. Beginning contract value is $275 because they're giving you a 10% bonus. Okay, but the benefit base starts at $292. Then it grows all the way to almost $1 million. The end of 20 years is $969,000 because it's been growing guaranteed for 6.5. And so has the lifetime withdrawal rate, 6.57. Multiplied together gives you $63,663. That is amazing. And of course, I'll just play with one more number here. $1 million. Let's just see. 20 years, what $1 million will give you. $254,000 per year, guaranteed again the rest of your life. Let's say you only take that out for 20 years. Okay? You take that out for 20 years. You start at 70, your spouse is 69. You take that out to your 90, she's 89. You've taken out what? $5 million in guaranteed income? What if your wife lives another 10 years till 100 years old? She's going to take another $2.5 million. That's $7.5 million in income. That's $7.5 million of income from $1 million. Wow, that's really good. Okay, so when you're looking for the best annuity companies, let's just circle back to where we began. The best annuity companies, there's a lot of good ones out there, but certain annuity companies work better for certain time frames. Okay, for a longer time frame from 15 to 20 years, look at this. American Equity is the best one. Athene, didn't even talk about them. I work with them a lot too. They're really, really good. They've been around for a long time, over 100 years. They're better for stretching it out. But if you notice the income, 165, way less than American Equity. Okay, Sentinel Security is the closest one, and they're still way less. You got F&G, you got all the rest of these other ones that I talked about earlier. Of course, if you're looking for income much sooner, there are companies that are better for that. If you're waiting until 59 and a half, you can see EquiTrust, Sentinel's the best. North American's really, really good right now because they're giving you a roll-up rate for 10 years guaranteed. And it just puts them in a sweet spot for giving you $113,000 of income from $1 million. That's really good. So, of course, you can get a little bit more if you want to go with EquiTrust, but it's just really important to know how these companies work. If you want to work with a professional who works with all of these companies, who knows the ins and outs of each of these companies, you should contact me. There's a link below this video. It's very easy. You can just book a call with me. It goes directly to my calendar, and we'll talk about exactly what you're looking for. Okay. I don't care what kind of annuity you're looking for. I don't care what the amount is. You should invest at least $100,000. I'll tell you that up front. That's really important. If it's less than that, you probably should save. You probably should just put more money away. And so you're in a better position to fund a retirement that's more realistic for you. So that's what I would recommend. Again, book a call. Happy to chat with you. Happy to answer your questions. And I'm not going to try to sell you anything. Okay. If you want an annuity, I'm happy to help you. Me and my team are in place to be able to make it happen for you if that's something that you're looking for. So anyways, thanks for watching, and we'll see you next time.